Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news: repricing for American risk is underway, evidenced by rising US Treasury yields, a falling US dollar, and commodity price spikes. But first up today, American durable goods orders rose in November and by more than expected to be 10.5% higher than year-ago levels, a gain that has impressed markets and came as a complete surprise. Non-defence capital goods orders, excluding aircraft, were up 4.3%, also a good gain. But there are a number of factors we should take into account when assessing this data. It is nominal and not inflation adjusted, and tariff taxes will be part of the increase. Second, we look back at the ISM and S&P Global factory PMIs for November, and they did not pick up this type of gain. The ISM 1 actually reported a contraction, the S&P Global an unchanged expansion. And then there is the new management at the US data agency that releases this data. All three factors mean we should wait a bit to see if this is an outlier results. Risks abound. Meanwhile, the Chicago Fed's National Activity Index came in below trend in November, although not as negative as it was in October. This is the 9th below trend reading in the past 12 months. And it was a similar story for the Dallas Fed Factory Survey, which also recorded a pullback for January, although not as steeply as it did in December. Output and new orders rose, but the overall index was held back by a sharp jump in prices paid for inputs. Only about half of that was recovered by prices received, even though that rose sharply too. And there was a US Treasury bond auction today, and while it was well supported, it did bring a notable rise in the yield achieved. The 2-year bond delivered a yield of 3.55% at today's event, up from 3.45% at the prior equivalent event a month ago. This is the largest shift in yields we've observed in these events in more than a year. The US's ballooning deficit can't really afford rising interest rates, but then again, it couldn't afford the tax cuts for the rich either. And Singapore's industrial production dipped rather sharply in December to end up 8.3% from the same month a year ago, but the December pullback was less than observers had expected. In addition to Auckland and Australia, Monday was also a public holiday in India, Republic Day. And the two top EU officials were in New Delhi to seal a key trade deal between the two economic powers. In fact, it's been called the mother of all deals and is set to be signed later today. Both sides are making major concessions to get it done, and it is likely to boost trade in a globally significant way. The EU will get major access to India's car market. India will get the EU's preferential tariff most favoured nation treatment. The US Treasury 10-year yield is now at 4.21%, down 3 basis points from this time yesterday. And the price of gold will start today at $5,087 an ounce, up $104 from yesterday and a new record high again. Silver is up proportionally more, up $12 to $115 an ounce, and also a record high. Platinum has risen to $2,857 an ounce, up $116 an ounce. Tin prices are up 9.5% today, and copper is up 1.5%. Both build on recent surges to record highs. A falling greenback accentuates these rises, but all commodities are still priced in US dollars. American oil prices are holding it yesterday at just under $61 a barrel, while the international Brent price is firmish now just on $65.50 a barrel. And the Kiwi dollar is up 30 basis points from yesterday, now at 59.7 US cents. Against the Aussie, we're up 10 basis points at 86.4 Australian cents. Against the euro, also up 10 basis points at 50.4 euro cents. That all means our trade-weighted index starts today at just under 63.5, up 40 basis points from yesterday. It's highest since late September. And the Bitcoin price starts today at $87,677 and down just 0.3% from yesterday. Volatility of the past 24 hours has been modest, at just under plus or minus 1.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.